And welcome back to Front Row Tampa Bay. Florida and Tampa Bay in particular are often cited as examples of what went wrong with the real estate market. And while our market did struggle, our market is on the rebound. But what sort of opportunities will this present over the next decade? We have three guests here to talk about that. John LaRocca is Senior Vice President of Hillsborough River Realty Company. John Sebree is Vice President of Public Policy, Florida Realtors. And Alan Brinkman is President and CEO of SunTrust Bank, Tampa Bay. Gentlemen, thank you all for being here.
Thank you. Thanks, good to be here.
What did go wrong? Well, we know the bubble burst. And my first question for you is, particularly in the housing market, were those values overinflated to start with, and why? You all have an opinion about that.
Well, I would say from the realtor perspective, I think there were short-term memories and people thought this will never end. You know, they're going up every year, every month, and they'll continue to go up. And that had just sort of become the way everyone thought for years. I mean,
I agree. You know, if you look at housing trends over 30, 40 years, the line in which housing prices rose has been pretty consistent up until 2003 to 2007, which it had a huge run up. And if you think about the whole idea of buying a home, it's such a deeply personal decision. And, you know, the whole idea of buying a home, living in a home is the American dream, to stay in the home for a long time, raise your family, et cetera. And what happened is the housing market became an investment vehicle, which really it was not what it was intended for. And what we saw was inflated prices. We saw, you know, an intense appetite for taking out mortgages to flip homes. And that would probably, in hindsight, as we all know, was some warning signs several years ahead of when the market crashed.
You just said flipping a home, and
Yeah.
that means you buy it as an investor, as an investment. You may or may not fix it up, and 6 months later you're trying to sell it for an even higher price.
Correct.
Yeah, and not a healthy thing in the end.
Right.
And a lot of people took a bath on that, a lot of these investors. John, you specialize in commercial real estate.
That's correct.
Was it hit equally hard?
I believe so. We saw, certainly, our investment is here in the Tampa Bay market, and we saw the demand for office space, and our investment is a development site catering to the office market, and we saw the market take a tremendous hit with job losses and the collapse in the residential market obviously affecting the whole industry. We are optimistic, however, that we see the market coming back. It's trending, albeit slowly, but trending in the right direction. Within the Tampa Bay market itself, the Tampa downtown market, the West Shore Business District, certainly are the prime marketplaces for commercial office ventures, and we're optimistic that there'll be a place for some new construction in the coming years as rental rates and the demand for office picks up.
At its worst, you saw it all over the place. You can drive by a strip center, for example, and see empty storefronts. You can drive by an office building and say, space available, but that might present opportunities. For example, if there's leasing space available for a company, they might get a better deal now if they're seeking office space, right?
Certainly within this market, depending on what the use is, in many cases that's correct.
Do you think we're overbuilt commercially right now or not?
I think certain markets might be, that the commercial market that followed the residential trend, where there was a lot of strip commercial built in areas where the housing market was being developed. But I think if the market is a good market, it's a good location, the classic story location, I think those deals are becoming far and few between.
John, from a statewide perspective, are certain areas of our state recovering more quickly? I heard that there was a glut of condos, for example, down in Miami.
Great
and
example.
Now suddenly they're gone. They're sold.
I mean, this is basically the story statewide, but since you use Miami as an example, 2 or 3 years ago, someone would have told you there was 10 years of inventory on the market in Miami because of all that new construction of condominiums. Today, there's less than 4 months of inventory. And statewide, there's less than 5.5 months inventory. And that's very low inventory for the state, which is why I think you'll see in the residential market, there's certainly no overbuilding. We actually need to see some new construction start to happen, which of course will create jobs, and then I believe a commercial rebound will follow that.
An alarming statistic, which remains true to this day, I believe, is that roughly 50% of homeowners in the Tampa Bay area are underwater on their mortgages, meaning that their homes are not nearly worth what they still owe their mortgage. I think, is this logical to assume that if those people, some people are behind in their mortgage payments, and we all know about the foreclosure crisis, but those who are still able to afford making that monthly payment, who are in a home that they're underwater on, it makes no sense for them, it wouldn't to me, to try to sell that house when they would still owe a considerable amount on the mortgage.
Sure, and in the short term, I think we're going to see prices come back fairly quickly, because even in the most recent data that we just released for July, home sales prices are up 12% in the Tampa Bay area year over year. That's a huge jump from 1 year ago, July, to this July, and I think we'll continue to see that every month. So if they just hold for a little while, if they are underwater, they'll find themselves in a much better position. But it's also becoming very much a seller's market. You know, prior to this, we had a lot of cash buyers who maybe were finding it difficult to get a mortgage, or the lending
investors.
requirements were just tight,
Right.
or investors just want to pay cash, and that deflates the price as well. So we're seeing much less of that as we get back to a more normalized market.
Alan, I'm not talking about your bank specifically, but the banking industry was complicit in this, was it not? There were a lot of bad loans made. People were getting into homes and taking on a mortgage they really couldn't afford. So how has the climate changed with regard to loan practices?
Loan practices have begun to normalize, which is where they were in the 80s and 90s, and they're going to be hopefully moving forward. What happened relative to the banking industry was really a mortgage situation. You had different parts of a mortgage industry selling notes to a broader market, and there was no recourse relative to how they held their mortgages. So what you saw, banks being relatively aggressive, you saw mortgage companies being relatively aggressive, but the indicators were showing that this phenomenon was working. And you can't really, I think, fault buyers or banks in an irrational, exuberant market, is what you see, what we saw with the internet boom, et cetera. People continue to be very entrepreneurial and chase, I think, any kind of market movement that is profitable for them. What you see now is banks being very, very cautious and getting back to what I call traditional lending, which is really looking at a personal cash flow, a history that the person has, documentation of income, and stability of the job market and stability of their own employment. So what you'll see in the future is a very normalized, stable lending practices that we had for many years. I think everybody learned lessons.
More stringent guidelines than ever before, or what we have always had in place?
What we've always had in place prior to the 2003-2007 run-up. You know, I can remember getting my first mortgage many years ago, and the paperwork I had to go through I felt was cumbersome, but it protected me, it protected the bank, and I felt like I was in the right product and the right mortgage for the income I made and the history I had, and I think that's what you're going to see going forward.
Are adjustable rate mortgages still part of the equation? And when I say that, I mean those that have a very low rate, or some are interest only for 5 years, and then you have this huge balloon. Are those still part of the equation?
And a very small part. It depends really on your income and history when you look at particular loans like that, and they're used as vehicles for several different appetites around mortgages, but traditional home lending is back, and I think a 30-year fixed mortgage, 15-year fixed mortgage is really where we're lending, and I think most people are taking out mortgages right now. We've seen about a 68% increase in our lending year over year around mortgages. So that shows you, to dovetail, what they were saying is the market is coming back. It's coming back very strong, and I think it will be a seller's market for quite some time.
Interest rates are still really low, which is a benefit to both the real estate, or I should say, the commercial sector and the homeowner sector.
Well, I'll mirror what was said. And from the commercial sector side, we also provide real estate advisory and asset management services. And I've certainly seen in the last year where banks are making commercial loans, whereas before, over the last 2 or 3 years, it's been fairly quiet in terms of new money coming into the market from a lending, acquisition, and development standpoint. But we're seeing more and more of that money coming onto the market, obviously with the right support and collateral, but we're very optimistic that things are trending in the right direction.
John, what's the foreclosure scene looking like right now? It really has slowed down, and what I mean by that is the numbers of homes in foreclosure still a staggering amount, and it's kind of frightening to think about. But the foreclosure process is almost ground to a halt.
Well, I think it took the banks and the realtors really figuring out a system here. You know, And Alan can speak to this much better than I can probably, but when we had what you called the run-up, everyone's making loans, everyone's getting loans, and the process requires just knowing how to service a loan. And then we have this fall that we had, and then everyone's trying to figure out, how do we do short sales? How do we do foreclosures? And I think just dealing with that process caused it to be very, very slow. I think now my members, the realtors in Florida, are working much better with banks and understanding the process and how each individual lender is working and investors in loans and that kind of thing. So the short sale process is moving very fast.
Let's talk about short sale. We were talking before
30,
we came out.
60 days.
Short sale, this is terminology we didn't talk about in years past. Not a terminology I was familiar with. Explain what a short sale is. Any one of you can tell. The banker should do that.
Yeah. A couple things around short sale. One is we didn't have that vernacular in our vocabulary simply because we were in the Southeast, and Florida continued to have rising house prices. People continue to come in the state. So it's a learned behavior, I guess you'd say, around short sale. And a short sale is basically when a buyer negotiates or a seller negotiates with a bank to sell a house at a certain price, maybe below what is owed. And the bank says, hey, we'll take that haircut along with you to move the house. And that is really what it's all about. And, the whole process, and I think the remark about learning through this has been well documented, and I also believe that from our perspective as a bank, we want to help the seller. We want to help the home buyer. We want to help this process along, because nobody wins in these situations. And getting somebody back into a home or back into a situation where they are healthy from a financial standpoint is our main goal. And the short sale process is new. I think it's probably here to stay in our vernacular for forever. Because of what we learned, but I do anticipate over the years we'll see less and less of this kind of behavior as we move forward, because of the lending guidelines have changed. We're more respectful, I think, of the process.
And loan modification, how often does that happen?
Happens quite often. Very situational, though. It all depends upon what the situation of the current customer is, or the current mortgage holder is, and depending on what their behavior has been, depending on what their current situation is, there are a lot of vehicles we use for loan modification. Sometimes it's a reduction of principal, sometimes it's a refinance, and sometimes it's a short sale, as we talked about.
Just quickly, in the time we have left, your optimistic outlook, and I'm sure it is, and how long it will take for this recovery to be complete. I don't know how you define complete, but to get back on top of our game.
Well, from our perspective, we think it's going to be 18 months to 2 years. It's all about jobs. And as long as we are building and growing jobs in our marketplace, we're optimistic that the commercial real estate market will come back.
John?
I think most people always want to know when was the bottom. And I think you never really know when you've hit the bottom until you're far beyond it. And I think the statistics would show that we're now months and months past the bottom, because the prices are increasing as they are. Home sales are up 10 to 12% every month, and the inventory is so low. So we've hit that bottom, we're on the way up, and then it'll start happening even faster. So now I would say it really is a 2013 recovery, because every 2 home sales creates 1 job. And we all know that we've got to have jobs, and when we create those 1 jobs and 2 jobs and hundreds of jobs, it's just going to start creating a much more positive real estate market, which then, the ripple effect of that through the entire economy is huge.
I wholeheartedly agree. I mean, if you really think about, some news came out yesterday about the Tampa Bay area from the Economic Development Group, and 29,000 jobs were created. It's more than Miami, Orlando, and Jacksonville combined right here in this area, which is going to spur home ownership, which is great. 2, we are already starting to see in some pockets homes selling for over the asking price, which shows you that obviously the inventory is down, lending is up because people are able to get financing, and I think 2013 will be a very bright spot for Florida in terms of its housing situation.
That is a seller's market. Over the asking price?
Over the
That's
asking
a nice
price.
thought.
Yeah.
Good.
I'm not in a selling mode, though. All right, gentlemen, thank you very much.
Thank you.
Coming right up on Front Row Tampa Bay, the woman who's taking USF global.